Hey everyone, welcome back to the show. Today we're taking a deep dive into something that's probably on a lot of your minds. The California housing market.
Yeah, it's definitely a hot topic.
I mean, $830,000 for a median-priced home. Interest rates near 7%. It's a lot to wrap your head around.
And then you throw in the fact that only 18% of Californians can actually afford a median-priced home right now. It makes you wonder if we're headed for another 2008.
Exactly. That's what we're here to figure out. Is this a crash in the making or just a correction?
Well, the good news is California isn't facing the same kind of meltdown we saw back then.
Okay, so no housing apocalypse. That's a relief. But what's the difference between a crash and a correction?
Think of a crash as a free fall. Prices plummet by 20, 30, even 50%. It's a total market collapse. A correction, on the other hand, is more like a gentle reset. Prices might dip by 5, 10%, but it's not necessarily a sign of disaster.
So more like a bump in the road than a complete derailment.
Exactly.
So how do we know which way California is headed?
Well, one of the key indicators is inventory.
Right. Our sources mention that inventory is super low.
Yeah, in many areas, there's less than 2.5 months of supply.
And that means?
Low inventory actually tends to keep prices high.
Really? So even though it seems like a bad thing.
It's kind of a double-edged sword. Basic economics. Less supply, more demand.
So those bidding wars we keep hearing about.
That's exactly what happens when inventory is tight.
Makes sense. So low inventory on its own doesn't mean a crash is coming.
Right. There are other factors we need to consider.
Like those high interest rates.
Exactly. Those are definitely having an impact on affordability. It's making it harder for people to qualify for mortgages, and it's changing the way buyers are approaching the market.
So maybe instead of that dream home with the huge backyard, people are thinking more practically.
Exactly. Downsizing is becoming more common. Smaller homes, condos, properties, and less expensive neighborhoods. Those are becoming more attractive options.
Okay, so location, location, location. It's not just about the size of the house anymore. It's about where that house is.
Exactly. And our sources talked about how different regions are experiencing the market differently.
Right, Silicon Valley versus, say, an inland region. Are those really that different?
Oh, absolutely.
Oh.
Silicon Valley, even with the tech layoffs, still has these massive companies driving demand. And those prices are likely to stay relatively stable.
But inland?
Inland regions are facing bigger challenges. Affordability is already a concern there, and with interest rates rising, buyers might pull back even further, which could lead to some bigger price drops.
So your beachfront bungalow in Malibu is probably a different story than a fixer-upper in Fresno?
Exactly. Different markets, different dynamics.
And this whole idea of speculation, that was a big factor in 2008, right?
Absolutely. But thankfully, we're not seeing the same level of risky lending and speculative buying this time around. Lending standards are much stricter now.
Which is a good thing.
It is. It helps prevent those artificial bubbles that are prone to bursting.
So no more flipping houses like it's going out of style.
Probably for the best.
Yeah.
It creates a much more stable market in the long run.
And speaking of stability, what about foreclosures? Those were a huge part of the 2008 crash.
Thankfully, foreclosure rates are at historic lows right now.
That's good news.
It is. Most California homeowners have a good chunk of equity in their homes, which means they're not underwater on their mortgages.
So less panic selling and a more stable market overall.
Exactly.
But even with all these positive signs, it's still a tough market for buyers, especially with those sky-high prices. Only 18% of Californians can afford a median-priced home. How is that not a recipe for disaster?
Well, that 18% figure does highlight the affordability challenge. But instead of fueling a crash, it's more likely to contribute to price stabilization, especially when you consider all the other factors we've discussed.
Okay, so it's not a simple crash or correction scenario. There's a lot more nuance here.
Absolutely.
But what does all of this actually mean for someone who's thinking about buying or selling a home in California right now?
That's the million-dollar question. Let's explore that next.
Okay, let's unpack what a potential buyer or seller needs to know. We'll be right back after a quick break. Okay, so we've talked about the big picture. Now let's get down to the nitty-gritty. What's the game plan for someone who's actually thinking about buying a house in this market?
Well, first things first, be prepared. This isn't the kind of market where you could just jump in head first.
So no impulse buys.
No impulse buys. Get your finances in order, get pre-approved for a mortgage, and really think about what you need in a home.
Not just what you want.
Right. Needs versus wants. It's important to make that distinction. Don't get caught up in the hype. Focus on what's going to work for you long term.
Practicality over trends.
Exactly.
But isn't waiting for the perfect time to buy kind of a myth? I mean, the market's always going to be doing something.
You're absolutely right. Trying to time the market perfectly is almost impossible.
So what should buyers do?
Think of it like surfing. You're looking for the right wave, but you also need to be ready to paddle hard and adjust your course as needed.
Okay, ride the wave. Don't try to control it. And what about all this talk of regional variations? How can buyers factor that into their decision making?
It's all about understanding the microdynamics of each region. If you're set on Silicon Valley, for example,
Proximity to tech giants, all that.
you're going to face a certain level of competition and a certain price point. But if you're open to exploring other areas, say inland regions.
You might find more breathing room.
Exactly.
So it's a trade-off. The hustle and bustle of the Bay Area versus maybe a more relaxed pace of life in a less expensive region.
And with remote work becoming more common, those trade-offs are becoming more appealing to a lot of buyers. They're prioritizing lifestyle over just chasing the highest salary.
So maybe a change of scenery is good for the soul and the wallet?
It can be.
No, let's flip the script. What about sellers? What are they up against in this market?
Well, for sellers, the key is to be realistic. Don't let your emotions get the best of you,
Especially in a cooling market.
right? Overpricing your home can be a huge mistake.
Well-
It can lead to your home sitting on the market for months. And that creates a perception problem. Buyers start to wonder what's wrong with the property.
Yeah, that's not the message you want to send.
Not at all.
Yeah.
Price it competitively from the start. Work with an experienced real estate agent who knows your local market. They can help you find that sweet spot.
So find an agent you trust, someone who's in tune with what's happening on the ground.
Exactly.
But what about all those little things that make a house feel like a home? Do those still matter?
Absolutely. In fact, they might matter even more. When the market cools, presentation becomes paramount.
So curb appeal, staging professional photography.
All of that. It can make a big difference in attracting buyers and getting the best possible price.
It's like a first date. You want to put your best foot forward.
Exactly.
Yeah.
You're not just selling a house, you're selling a lifestyle, a feeling.
Okay, so we've talked about buyers and sellers. What about investors? Where do they fit into all this?
Well, California is still a great place to invest in real estate. But investors need to be smart about it, especially with interest rates where they are.
So no risky moves.
Right. Don't over-leverage yourself. Look for long-term opportunities in areas with strong fundamentals.
Cities near tech hubs, areas with infrastructure projects.
Exactly. Those are the places where people are going to want to live and work, regardless of what the market does in the short term.
So bet on the future, not on the next big flip.
Exactly.
But let's be real. There's a lot of uncertainty in the air right now. Global economic headwinds, inflation, those rising interest rates. How can anyone make sense of it all?
You're right. The macroeconomic picture can feel overwhelming. But here's the thing. Even when the broader economy is shaky, real estate often remains a safe bet.
How so?
It's a tangible asset. It's a piece of land, a structure. It's not going to disappear like a stock or a bond.
They're not making any more land.
Exactly.
Yeah.
And if you buy a well-maintained property in a desirable location, it's likely to hold its value over the long term.
Even if there are some bumps along the way.
Exactly.
But let's not forget the emotional side of all this. Buying or selling a home is a big deal.
Absolutely. It's a roller coaster of emotions. You're making major financial decisions, dealing with family dynamics, thinking about lifestyle changes.
So how do we manage all of that?
I think knowledge is power. The more you understand about the market, the better equipped you'll be to make sound decisions.
So do your research, talk to experts.
Exactly. Arm yourself with information.
We've talked about regional variations, but are there any broader demographic trends shaping California's housing market?
One trend that's really interesting is the rise of the millennial homeowner.
Millennials are buying houses.
They are. They're the largest generation in the U.S. And they're starting to enter the housing market in a big way.
But they're probably doing things a little differently.
They are. They have different priorities. They care about walkability, access to amenities, sustainable features.
So maybe that trendy condo in a walkable neighborhood is more appealing than a big house in the suburbs.
It could be. It all depends on the market and the target buyer.
So millennials are changing the game.
They are. And that's going to have a ripple effect for years to come.
Okay, so California real estate, it's never boring. Is this just California being California, or are there broader lessons we can learn from all of this?
Well, California is unique, but there are some universal truths about real estate. Real estate is cyclical. We've seen booms and busts before, and we'll see them again.
So don't panic if the market dips.
Right. And don't get caught up in the frenzy if it surges. Ride the wave, but don't let it control you.
And remember, a home is more than just an investment.
It's a place where you live, where you create memories.
So don't lose sight of that in all the market analysis and financial calculations.
Exactly.
Well said. So what's the best advice you can give to our listeners who are just starting their real estate journey?
Be curious. Ask questions. Talk
Yeah.
to experts. Do your research. And immerse yourself in the world of real estate. The more you learn, the more confident you'll feel.
So knowledge is power.
Yes.
Great advice. So we've covered a lot of ground today. Regional variations, demographic trends, interest rates, the emotional side of real estate.
We've only just scratched the surface.
That's right. We've got one more part to this deep dive where we'll explore even more of the nuances and complexities of the California housing market. We're back and ready to wrap up our deep dive into the California housing market. You know, we've talked about so many factors already, but there's one we haven't really touched on yet: technology.
Yeah, technology's had a huge impact on real estate.
I mean, think about it. Online listings, virtual tours, algorithms that predict market trends, AI-powered valuations. It's mind-blowing.
It really is. It's changed the way we search for homes, the way we buy and sell, the way we understand the market as a whole.
It's like having a whole team of real estate experts right at your fingertips.
In a way, yeah. But does that mean the traditional real estate agent is a thing of the past?
That's a good question. Is all this tech making agents obsolete?
I don't think so. Technology is a powerful tool, but it can't replace the human element. A good agent brings local expertise, negotiation skills, and a deep understanding of the emotional aspects of buying or selling a home.
So it's not just about the numbers.
Right. An algorithm can't hold your hand through a stressful bidding war or help you find that perfect neighborhood that just feels right.
So it's a partnership. Technology gives us data and access, but human expertise guides us through the process.
Exactly.
Makes sense. But even with all this tech and all the information available, there's still a lot of uncertainty surrounding the California housing market. Global economic headwinds, inflation, those interest rates. How can we make sense of it all?
It can feel overwhelming, for sure. But even in uncertain times, there are opportunities.
Like what?
We'll take those rising interest rates, for example.
Hmm.
They've made it tougher for some buyers to enter the market, but they've also created a unique situation for sellers.
Really? How so?
A lot of homeowners locked in those super low interest rates a few years ago.
Back when rates were like 3%.
Exactly. And now they're hesitant to sell because they don't want to give up that low rate for a 7% mortgage.
So they're staying put.
Exactly. Which further tightens inventory.
And supports prices. It's a chain reaction.
It is. And for buyers who are still in the game, it might mean less competition for certain properties. Sellers might be more willing to negotiate, knowing that the pool of potential buyers has shrunk a bit.
So maybe those higher rates aren't all bad news.
It all depends on your perspective.
That's true. But, you know, California real estate has a reputation for being, well, let's just say a little wild. Is this just California being California, or are there broader lessons we can learn from this?
California's market is definitely unique, but there are some universal truths about real estate. Real estate is cyclical. There are going to be upswings and downswings.
Boom is busts.
Exactly. The key is to understand the long game. Don't get caught up in the short-term fluctuations. Make informed decisions based on your individual goals.
So don't panic if the market takes a dip.
Right. And don't get swept up in the frenzy if it surges. Ride the wave, but don't let it control you.
And remember, a home is more than just an investment. It's a place where you live,
Yeah.
where you make memories.
Exactly. It's where life happens.
So don't lose sight of that in all the market analysis and number crunching. Great point. So what's the best piece of advice you can give to our listeners who are just starting their real estate journey in California?
Be curious. Ask questions. Don't be afraid to reach out to experts. Do your research and really immerse yourself in the world of real estate.
Knowledge is power.
So be informed, be prepared, and maybe have a little bit of that California adventurous spirit.
I like that the California housing market is full of possibilities. It's a place where dreams can take root and where the future is always under construction.
Well said. That wraps up our deep dive into the California housing market. We've covered a lot of ground, but remember, this is just the beginning of your real estate journey. Keep exploring, keep learning, and most importantly, keep dreaming. We'll see you next time on The Deep Dive.
For another fascinating exploration of the topics that shape our world.